Hi, Warriors. Happy Dr. Jekyll and Mr. Hyde Day. Everyone ready for it? Who do you think Paul's going to be, Dr. Jekyll or Mr. Hyde today? Hello, Michael, Kman, James, Rick, how are you? Team, how's it going?
Happy
Critical day.
FOMC day, Coach.
Yeah. Is he going to be Dr. Jekyll or Mr. Hyde, Blake?
I say they both might come out today.
Just both in the presser, right?
That's
Okay.
right. That's right.
So big day in Euro. We always say every day is critical, but looks pretty critical here. We don't hold here. I think we get into that bearish mode and could even retest and take out 107. In fact, I think this move from here, if we break down from here, measures right around 107.10, 20, and we get, break to those levels, 107 will go. So I think it's you, me, and K-Man today, right?
Ryan's here, and his microphone is extremely sensitive. Hey, Ryan. Good morning.
Morning, mate.
I can actually hear you clicking around.
Sorry.
Yeah, no problem. I just, I wanted to say this is day two, Dale, of us testing the 200 DMA with the euro. But let's also just note that the dollar index itself is closing and closed yesterday above the 200 DMA.
Yeah.
And, a lot of that has to do with obviously what happened with the dollar yen. And, this dollar yen looks like it could really bust a move to the upside too. So yeah, it's a dollar story today. And I think the Fed's going to have a lot to do with it. But, because of the time change, Dale, you and I actually had the ability to do this. I did it this morning and I got to listen to the tail end of the flow show. And Ryan was showing the dots and talking about his expectations. And Ryan, I think you should tell Dale a little bit about how you feel about the dollar. Let us know, because I was listening to the flow show because of the time change, and we get to do that probably for the next week and a half, which is a really nice benefit to be able to listen to your show. But your views on the dollar are a little bit different. You're not as constructive on the dollar. Am I correct with that assessment?
Yeah, pretty much. I think the market may be sided a little bit too hawkish going into this one. A lot of people looking at whether they move to two cuts, those dots going higher, pushing back on rate cuts further than June. And I just think the market's leaning a bit too much to the hawkish side. And, if Powell isn't as hawkish, then the big price risk is that all those expectations unwind. Traders now see a 75% chance of a cut in June, and that was only 50% on Monday. So you can see the shift. We've seen the dollar being bid since late last week on nothing really other than the Fed expectations. So yeah, there's a chance for a bit of an unwind. So my own personal view is I see some early indications that the consumer might be facing a little bit of a struggle coming up. Not confirmed yet, but I've seen some bits and pieces in the data that suggest that might be on its way. And if Powell talks about the economy, he can mention that he's worried about inflation being sticky. But if there's also worries about the economy, that will keep rate cuts on the table and maybe not what the market's expecting. So long story short, I'm potentially looking to fade any dollar rallies.
Well, you can totally see, Dale, that the stock market is really, really worried about and very optimistic that the dot plots are going to be adjusted as we sit at all-time highs. I mean, Ryan, if this happens, and I'm being very sarcastic here, if this happens and he's a little downbeat, that's enough to send the S&P to 5,300 today, in my opinion.
I'd like that very much. But yeah, I think the 52 break is obviously well on the cards. We're right up against it with 10 pips away from it, depending on what
feed you're using and what instrument.
What if he's Ryan? What if he's not real hawkish and semi-dovish, and all you do is get a pop out of, say, the euro from here, bounces to 109 and rejects it. That too is a possibility that the people,
Yeah.
because he may be, Rohit yesterday said, he may still talk about cuts down the line, which would be, what the market would be looking for. But if you get that kind of news, it's a reaction that really counts. So if we pop, the dollar sells off. I'm on the other side. I would be a buyer of dollar weakness. So just being devil's advocate here.
The great thing, Dale, as you well know, we can both be right. You might be right and get your move and you make money, and then it rallies and I hit it, and then
True.
I'm right. And so
it's all about time frames, right?
it's all about time frames. I think for traders, the important thing is where do we finish? Once the final word's been said from Powell, we'll have that 15, 20-minute period after where the market will jiggle around and do its thing. Now that the event risk is done, where we finish is going to be the important factor. I just said it and mentioned it about the S&P in the trade room. We could bust 5,200 over Powell, but if by the end of the presser we're back below it, that'll be a failure. That would indicate a failure there. And if that's the case, that'll be a triple failure up at that. And we haven't had a triple failure in any rallies in the S&P since the 4,800 break. So that would be a potentially significant move. So, yeah, as much as the dollar's going to move, Powell will walk down the fine line like he's done for the last 4, 5, 6 meetings. He's walked down the middle of the road. But the market's not expecting him to walk down the middle of the road. They're expecting him to step off to the hawkish side a little bit.
Yeah,
so he can keep his tune the same as the last FOMC and whatever. And that still will mean a move because the market's expecting something different. But yeah, where we close in anything will be important after the FOMC. So you shouldn't make a decision during the meeting. If there's a break, wait until it's confirmed after the meeting.
I also have this, to me, it's an important level, the 425 in the Dixie. If you look left, 425, that was the high of the rally when we tried to hold here. And I think that's going to be another confirmation. Getting back above 103.80 was the first, 4 1/4 would be the second. And that's how you could get 106. So anyway, time will tell.
But if we're below your 103.80 after the Fed, it'll be a completely different picture then, won't it?
Yeah. So then the breakdown that became a false breakdown becomes that this move above it was a false breakout.
Yep.
So yeah. So why don't you cover the yen, because Blake said that this could happen yesterday. We're going to test these levels. This was the high of the move last year. What was it? 151.90.
Yeah, basically 152 and resistance. I mean, don't everybody should know that the flag pattern still points to 154.
Okay.
I mean, that's and we were talking about this yesterday in the ForexAnalytix chat room. And Ryan, I know you mentioned it this morning as well. Look, we're getting into risks of intervention levels, and you look at the euro yen. We're at levels we haven't seen since 2008. You look at the Aussie yen, about ready to break out, bust a move to the upside. You get all these yen pairs moving, put us up, another 100, 150 pips higher. BOJ is going to wake up tomorrow morning and go, what the hell's happening right now? And, we are at risks of what do they call it? Yen intervention. Yen intervention.
The intervention.
Intervention. Right, Ryan?
Yep, exactly that.
I would just point out that these are weeklies, though. So, I'd have to go to some time frame. This high, in euro yen was confirmed. See? And this high in euro yen new high, we have like a 64 reading. go to like maybe a 4 hour and see if it's confirming. Yeah, it's confirming. So, still no reason to be short these pairs except for a pullback. It usually don't make a high. It could be a high, but usually not the high when you have RSI confirming, especially with a 80 number. Aussie yen's still the weak sister, just like we identified yesterday. Aussie dollar being the weak sister. So there you go on the crosses. And uranium stocks have been taking a hit. It's interesting because they were in favor, and now money has moved back towards fossil fuels. Natural gas is putting in a higher low. Blake called that breakout in WTI over 80. Getting some continuation move? No, but let's see. Confirmed high. Nat gas, it could just be an ABC, and you look at the daily, but it is a higher low. So the widowmaker may not make any more. I mean, I think there were enough widows out here to fill up a whole Oprah audience. So anyway, you're putting in a higher low in nat gas. Could be setting up for something to the upside. And those are my calls. The next one's yours. 1-800-899-BEAR.
Oh, the bear is out. The bear is out.
That was my phone number when I had an IB.
I know, that's back when you had your talk show. I love it.
Yeah. Anyway. So
all right, Dale, can I take over from here?
Of course.
All right, buddy.
I'm not so convinced that yields are going to just drop hard from here. I guess back under 420, I'd have to go with it. But for right now, over 420, I can't get bearish yields to come down.
I'm with you. I'm with you on that. I don't, I sit here and look at the market, and I know, Ryan, you're not as upbeat about the Fed at this point, or thinking they're going to be, super accommodative at this point. You think that the Fed is not going to fiddle with the dots, and that's going to leave scope for some dollar weakness. I don't know. I sit here and look at the dollar, and I look at yields, and it's hard for me to fade this, but I can also see the idea that you just said a moment ago, Ryan, that if the dollar does fail here today, it will be a different picture. And that I don't disagree with, because if you look at what the dollar is doing today, this daily candle is a daily candle. It can change a lot between now and the close. If we fail here at the 618 retracement and we close back below the 200 DMA, that is, as you guys mentioned earlier, it is going to be a failed breakout. So, but as of right now, I look at the dollar, and it's hard for me to see it at the moment, based on the moves over the last couple of days going into the data. And I have to say this, that the dollar looks really good despite the very, very strong equity markets. So let's not all forget that.
How about sentiment, Blake? What's DSI saying about the different pairs?
Well, the DSI well, first of all, for the markets, generally speaking, not a lot. I mean, we're at higher levels, but not like ridiculously high levels. I mean, so you look at the S&P, I mean, we're trading in we're the DSI is in the 70s. The yen is the one that is the big one. We're at 10, and you start getting into the single digit midget numbers, and next thing you know, you're talking about a reversal. So when you have the yen that's around 10 and it starts getting to the 10-9 level, that's when you have to start looking for the sentiment is too extreme. And that makes sense. I mean, the dollar yen is closing in on the you know, the 152 level. So anyway, but none of the other DSIs or numbers are really that extreme, but the yen. That's why when you look at the S&P from a sentiment point of view, we could trade at 5,400 in the S&P without much of an issue. So going back to what Ryan was saying, if the Fed's got, you know, reasons to be a little bit more dovish, why can't the S&P do this right here? You know, and let's keep in mind, again, I'm going to reiterate, this is 2022 highs. This is the 2022 lows. We're at the 127% extension of this entire move. So a break above 5,200 would be very, very bullish, and it would accelerate the idea that a blow off top in the market is coming. So, you know, who we haven't heard from this morning is we haven't heard from Kman. So, good morning, Kay. How are you?
Hey, good morning, guys. Good morning, everybody.
Okay,
Hey,
man.
so what are your thoughts going into the Fed today?
It's all about confirmation again. Do we get the confirmation that the changing those dot plots? So what I was saying. So there's a little bit of a small other topic, which is QT, because they told us they may talk about QT over this meeting. So that may be a bit of a kicker. But the main thing is the dot plots. If they change effectively in line with what the market may expect, so that is slightly tighter, I guess it's just going to give a confirmation for the dollar to continue to rally. And then I'm thinking about a few dollars specifically, which would be the yen and perhaps Aussie Kiwi lower. And I would say after Lagarde's speech this morning, Euro could get a bit of a knock on the head as well. But if in turn everything stays as is, then there's a risk of a bit of a pendulum swing on the yields, and we could see the tens back to 420. We could see the twos back below 462.5, which is where the dots are, right? Up to now. So you not only look at the 10-year today, you have to look at the 2-year as well, because if they change anything to the 2024 dots, it may be that the twos are in for a bit of a move as well, which in turn is going to tell you what the dollar is doing, and likely stocks as well. The other thing that I just want to remind people is that FX vols are still very low, and we have seen that, for instance, yesterday on that low print in the Canadian inflation data, where the dollar cat shot up, and then all of a sudden it turned around because due to the low FX vol environment, we are going to find people on the edges of any move. So we can't forget that, just for the expectations of. I'd say if the Fed is hawkish tonight, then or later in the day for you, then I think really the dollar could find a footing and continue, and we probably blow through 152 in the dollar yen. But yeah, I think I was talking about interventions this morning on in our chat room, and also we talked about it on the Flow Show. The speed of the move, we've done 250 points since the Bank of Japan. Add another 250 onto it, we will be trading at 154. And then I think we need to be really, really vigilant, because MOF may find it going far too fast, especially that the yen is very weak across the board. When you look at yen crosses, they are extremely weak. Well, the yen is extremely weak. So, and we are not only looking at the dollar yen, even though that's the most important thing, but we also have to look at the yen crosses. So the whole yen weighted index, you know, I guess they are looking at it as well. So if the yen goes weaker on its own, it's probably time to be a bit more vigilant as well, especially if the speed is there too.
Yeah, if you've been inside the ForexAnalytix community, we've been posting this chart a lot, and you know that the bull flag pattern finally completes above those highs. Makes a lot of sense to me. When you're looking at the 6J, I mean, we've been in a bearish wedge for forever and a day, and so, you know, to take out these lows, to get everybody out, then to really scare the BOJ, You know, why, and if you guys also have to understand the BOJ and their legion of traders are really very talented traders. They've been doing this business for a long time. They understand sentiment, they understand positioning, they understand how to trade the markets, and they understand different levels to intervene. If I was the BOJ, I would let the yen slip below the support, get everybody short, get everybody out, and then jam it right up their rear end. And if that was me, I mean, because if I had unlimited amount of money, almost unlimited amount of money, I mean, just, you know, deep pocketbooks like the BOJ, that's exactly how I would play it. I would be
I
like,
wonder how old candlesticks, which they were the creator of, are. I wonder how long they've been using candlesticks.
you know, probably as long as the Chinese has been using an abacus. I don't know. I mean, I don't know. Hey, man, you got any idea? I have no idea.
Any idea on that, Kay?
No idea at all. When I was in Japan, I had my Ichimoku Cloud sensei talking to me.
Okay.
So I'm more of a cloud watcher than a candlestick watcher. And it's the MOF deciding on interventions, by the way, not the Bank of Japan.
Yeah, I'm sorry. To be clear, yes, you're correct. But I just like to talk in broad terms. So thanks for clarifying that.
Yeah,
Ministry
thanks
of
for
Finance,
trying to make
correct.
them look dumb.
Yeah, that's
Yeah,
I
thanks,
am dumb.
Kman.
I am dumb. So
No, but it's just like it's
let's
just a
go ahead and
mixture of
continue
people
on.
listening,
Let's talk a little bit more about what we can also expect in the FX market regarding you know, other things that are happening. We only have the Fed, we have we just, you know, got over the BOJ, we have the Bank of England tomorrow. I sent out a tweet late yesterday. I was so tired from the BOJ the night before. I said I was meaning that we had CPI because we had weak UK CPI this morning. So Ryan, talk a little bit about that. What do you see there?
What I saw there was a similar thing to the BOJ. We had a move lower in CPI than expectations. I thought we might see a decent move in the quid as, you know, the market got a bit more dovish for rate cut expectations, and it hardly moved at all. So I think this is what indicates that the market is, you know, is happy with where it's at. We fully priced August as the first cut, but that was only a marginal change from before the CPI, and yeah, so there's and traders only hiked total rate cut expectations to 71 basis points from 67. So that was a small move. So there's not been much change in expectations for the BOE. I thought it might be a bit bigger. And that's why we've not seen much of a move in the quid at all. We've actually seen it gaining a bit. But if you're looking at euro sterling now, but you know, we're still stuck in that 20, 30 to 50, 60 area as we have been for weeks and months. So no change there. It all comes down to tomorrow and what Bailey says. You know, does he indicate an earlier cut than August? Are we going to see maybe a couple of the hawks, the two hawks, moving over to neutral, which would take the hike risk out a bit further? That's going to be the questions that we'll need to be looking at for answers tomorrow.
So, you know, since this, and this is interesting, you know, we've been talking about this range, and this is the shaded areas for the euro sterling is what we would anticipate a break of this range would give us a range extension one direction or the other, whichever way it goes. No one's expecting much out of the Bank of England tomorrow. I mean, as far as, you know, volatility goes, wouldn't that be funny if that was the one that created massive volatility? Like if something you know, a little nutter comes out of the Bank of England you know, decision tomorrow. What could be, Kman, what do you think could be a surprise from the Bank of England if we could get one? How do you think that would emerge, and what would that look like?
Yeah, I think for what the votes are concerned is I think it was Mann, right, who was the last one voting for a hike. She could come back into the fold and go for a hold. But the one that may, in my opinion, create a bit of negative surprise for the sterling is the hidden dove in Bailey coming out again. that may weigh a bit on the sterling. On the other side, if everything remains as is, despite those lower CPI data, it does seem to me that sterling is still some kind of currency that people are not averse to, you know. It does hold its ground relatively well because, as Ryan was saying earlier, today's CPI data coming in a bit lower, we may have seen a blip, for instance, in euro sterling, but it lasted exactly 10 seconds, the time of the release, and then we were back to where we were basically.
61.8 back is about 123.40, 23.60.
That's going to have to be the dollar Dale, I think, who is doing that rather than the sterling. Well, from where I
don't
see
care
it right
what I don't care what the cause is.
So you're Dale, you're thinking a move to 123?
Yeah,
To
under
618 right here.
Well, it's actually 61.8 back from the lows in October to the 129 high. Comes in there. Oh, you got it. 123.70, 61.8.
Yeah, right here, 123.70.
Yeah,
you can extend this all the way out, and but I would agree
it's
with
ambitious.
I don't think it is. And Dale,
okay, that's going to 118.
Well, no, the reason why I don't think that's ambitious is because I want to point out just a couple of things going back to the dollar, and I know, do we have data coming out today? I'm sorry, I'm still trying to adjust to getting up at 3 o'clock in the morning hour. So
oil, bro, just EIA stuff.
Yeah, all right, I ain't worried about any of that shit. All right, so right now this is the dollar index, and right now I have to say that the dollar index looks really good considering where stocks are at. I know I say it almost on a daily basis, but given the fact that the S&P is at its highs and at all-time highs, the dollar index looks freaking very strong. We closed above the 200 DMA. I'm looking for a move up to 106, but this is a Gartley pattern. And if a Gartley pattern decides it wants to turn into a butterfly pattern, we're moving up into 109 territory. So Dale, I've been a firm believer that the Fed is going to be higher for longer, which means that, you know, we're probably going to end up getting into June. And I'm fast forwarding, obviously, and just thinking that the U.S. economy continues to be pretty inflation sticky. Jobs market continues to be fairly, you know, strong. Yes, we'll see
gasoline prices are surging.
Yeah. You know, we're not going to have then we get into the political, like the Fed can't really cut rates as we go into summer because they don't want to look political. We're going to end up keeping, you know, having no rate cuts by the end of the year if things continue the way that they're continuing. That could be what sets the dollar off into higher levels going into the end of the year. I know we got to get through. It's only one step at a time, but for me, if we walk away today and the Fed does, you know, we walk away as a market participants thinking that the Fed may only cut two times going into 2024, the dollar will maintain its bid. And as long as data continues to stay, you know, we skirt a potential recession, then, you know, we're going to be trading higher going into the next few months. And so Dale, just going back to your original comments about the sterling, you look at the dollar index, it still looks pretty constructive here. As long as that continues, I don't see why the sterling can't trade down to 123. So anyway, those are just my thoughts as we go into today. Ryan, what are your last minute thoughts as we go into you know, the Fed here?
Yeah, well, I just want to clarify something because I don't want to be misrepresented. And the ratio saying that he's not as hawkish after hearing from me.
Oh, no. Your word stands, buddy. We heard it. They heard it. It's recorded. So go ahead. Just kidding.
Yeah, I'm not dovish the Fed at all. I think they're absolutely justified in keeping the higher for longer based on inflation. You know, I was saying it all through the latter part of last year. The market was far too dovish with its 4 or 5 cut expectations.
Yes.
But it's gone. The thing is, it's gone the other way. So I think the Fed should stay in higher for longer mode. But I think for today, the market is leaning a bit too far hawkish. So as a trader, I need to know where the risk is, and the risk is that the market's a bit too hawkish. But for me personally, I have seen a couple of things that just twig my flags about the consumer, and that's something to watch for. But until that's confirmed, the Fed are fully. I've been saying for a while, inflation hasn't fallen significantly for 8 months. If you look at the CPI numbers, that's no reason for the Fed to get overly dovish. So, yeah, I'm not dovish the Fed. I just think the market is a bit overly hawkish from where I think the Fed should be today. So,
Got it. Got it. Okay, and thanks for the clarification. And before we move along, Michael brought up a comment. He said, "Hey, wasn't there supposed to be a big announcement?" And Kman, don't worry, I'm coming back to you before Dale takes over with Adam. And Adam, thanks for patiently waiting. We were going to have a big announcement for ForexAnalytix today. We had to push it back. I mentioned it during the week ahead video. Ryan mentioned it during the flow show. We had to push it back like a week or two, and it's due to user interface issues. We want to make sure that your experience as a user is the best as possible, so we just wanted to tweak a couple things technically. So don't worry, we will be announcing, and we're going to announce it right here on Face. Like soon as we're done with our normal Face show, we're going to roll right into our special announcement in the next week or two. So just wanted to get that out there because we've talked about it a couple of times, but probably not enough. So stand by. Don't worry. Nothing's changing other than we just had to roll the date back by maybe 10 to 15 days. We're not really.
So hurry up and wait.
Hurry up and wait. Hey, that was the motto in the Marine Corps. We would hurry up everywhere and wait. Can't tell you how many times I've sat on a flight deck waiting with my machine gun in my lap going, what the hell am I doing here? All right. Anyway, Kman, your thoughts real quick. Just, I know we have Adam, your thoughts going in the Fed.
Yeah, I'm going to look at my main focus is dollar Swiss, because that's the combination Fed and S&P tomorrow morning. 35% or so priced for a cut, but if S&P gives in to corporate Switzerland, they could surprise and have a cut tomorrow morning. And if that's the case, then I guess Swiss is going to get tattooed, and that's what I'm waiting for with my positions. And
me too, Tony, with open arms. Bring it,
Tony. You wouldn't like to see me do a backflip. No, not at all.
Yeah.
All right, thanks, Kman. Let's hope the S&B opens the door. And Dale, I know you've got Adam here. Adam, thank you for being so patient. Dale, I know you guys are going to be talking about what your expectations are going to the Fed. What a great day to have Adam Button from Forex Live here. Sorry, Dale, go ahead.
Okay, hey, thanks, team. Kay, Ryan, Blake.
Cheers, mate.
Thanks, guys.
Dream team.
Adam, welcome back.
Hey, thanks for having me on Fed Day. Exciting one.
Yeah, Adam, great to talk to you. I missed you on the last cycle. Good to be with you.
Yeah, I usually have my camera going on here, but I'll see if it'll fire up here. You don't have to.
I'll take mine off if you.
Well, comb my hair for you.
People know.
People know.
I can't.
Right. We probably want to see some charts rather than me anyway.
All right. Well, why don't we do this? I'm going to come off the air. Why don't we start with what your expectations are for the Fed today? My view is that he's really been like Dr. Jekyll and Mr. Hyde. He was Dr. Jekyll back in December and released the animal spirits, and hard to put him back in the bottle. So what are your thoughts going into it? How are you looking to trade it?
Yeah, I mean, there we go. Well, let me have me up there now. I'm like, it's a trading event here now. For the bigger picture, I think they ultimately do cut. They've said we just need a little bit more softer data. Taking it from 5.5 to 5.25 isn't that big a deal. But the trade, I think today is sell the statement, buy the press conference. In equities and bonds, and the opposite in the dollar. I think that's worked for a lot of Fed decisions. I don't think this one's any different. So the statement and dots will be hawkish, and then Powell comes back and it'll be dovish when he says we just need to continue to gain confidence. We are seeing some things move in our direction. We want to have a soft landing. and I don't want to risk the expansion. Like he said, you can guess that maybe he will change from what he said 2 weeks ago based on a little blip higher in CPI, but I'm going to guess that he's going to stay the same thing he said 2 weeks ago, because plenty of data has softened as well, and it's not like he sounded like he was really on the fence at Humphrey Hawkins. So I think it's a pretty clear event to me. It's just a matter of how much the market freaks out when the dots go from 3 cuts to 2. And I guess the other thing I'm going to watch is we just need 2 dots to move, right? So if 2 dots move from 75 to 50, that's enough to move the median. Well, I want to see if 3 or 4 or 5 dots move. Well, I think that's a little more significant. So we'll be trading the headline on 50 to 75, but I think if it's just 2 dots that move, I think I take that as a dovish at this point, or less of a strong signal about a hawkish Fed, or at least coherence or cohesiveness from the Fed. If that's
why do you think he went on 60 Minutes, and what was the message that you gleaned from that program? Did you watch it? I should ask.
Yeah. I mean, he's just like, I think part of it is trying to say the Fed is in charge. I mean, when you think about their public communication role, it's different from their markets communication role. And it's really to assure people that they're in charge, prices are coming down, we'll have a strong and stable dollar. I didn't remember any real red flags for coming out of that interview. I think I remember the headline coming out of it was someone running with like a headline of something that he actually didn't say. It was like an inference of a more hawkish statement than if you actually looked at the transcription. He didn't say that. And that's kind of like what you have to watch out for right now, I think, with the Fed, with the statement. I think the main headline that a lot of people are going to run with is whatever is kind of the most hawkish. And that's, to me, it's obviously going to be a fade if that doesn't capture the essence of what's really changed.
I heard someone's interpretation that he admitted it was a mistake to monetize all the fiscal spending, and that the Fed is going to be responsible and not do that anymore.
Right. Well, the way I'm thinking about a lot of things in the US is around 2026 and the fiscal side. So we have 2024, 2025. There's a lot of chips and IRA spending in there. Just today, I mean, Dale's over there in Arizona. I think Biden is in Phoenix and going to announce, I don't know, $11 billion grant for Intel to build a chip fab there. And, presumably that's going to break ground maybe late this year, probably next year, and they'll be spending that, right? So you have this tailwind of fiscal spending that's this year and next year, and then it dries up in 2026. And the US is running 7-8% to GDP deficits right now, which is bigger than almost anyone else. I mean, we talk about this US dollar outperformance, and a lot of that's tech, and a lot of that's American productivity, and a lot of the other things that are working for America, but a lot of it is fiscal. And you get into 2026, and we're going to have to make some hard decisions about either on the spending side or raising taxes side to pay for everything in the US. And that's a drag. Whether they cut taxes or cut spending or raise taxes, either one is going to be a headwind for US growth. But for right now, and that plays into what you're saying about the Fed. Well, will they be there in 2026? I mean, to buy bonds, will they be less likely to go hard on the QE if we do get the economy slowing down in 2026, especially if we're only at, say, 3%? Maybe the Fed thinks the US hits a rough patch, then the Fed goes from, say, 3 or 3.5, wherever they are in 26, down to 2 or 1. But that's still not enough to reactivate QE. And then that fiscal drag continues for a number of years. So I think that's probably the 2025 trade, maybe H2 2025 to actually worry about the fiscal. Because, I mean, if you think about the fiscal side, it's really only been a tailwind to growth for I don't know how long now, since coming out of the financial crisis.
And supercharged during COVID.
Yeah. So that's sort of the timeline I'm working with there.
Okay, so let's talk about some trades. Your last interview, the headline was, Adam Button has never been more bearish on Canada.
I hate
Okay,
to make
so
headlines like that, but
here's the loonie in front of you. Look, it's acting pretty good even when the dollar went through a little period of weakness the week before. Really, all it did was move sideways. You have upside targets for USD CAD?
Yeah, I mean, I think we get up to that 138 and take a run at that. I mean, oil's really helping right now. We hit the highs of the year last year in dollar CAD, yesterday in dollar CAD. But you had a nice turn in risk sentiment, nice move in oil up to also the highs of the year. So that's helping the loonie. But Canadian CPI was soft. The Canadian data is softening. There is a divergence opening up between Canada and the US. The fiscal money has run out already in Canada. And so I don't think oil can hold it up for, it can maybe soften the blow here. And the Fed, though, I do think is dovish today, so I'm not in a rush to press that at the moment. But again, US growth is going to be pretty good. I was reading an interesting note yesterday from Deutsche Bank talking about the big dollar cycle, and they looked at them all the way back to the 70s in Bretton Woods, and about how the dollar doesn't tend to turn for a long time after the first rate cut, and you don't get a real dollar bear market until US rates are below the G10 median. So it's not, and it made a pretty compelling case that it's not just going to be that first Fed cut, it's the end of the dollar. So again, I do think there's a case to buy dollar CAD and buy the dollar.
Okay.
Maybe not today.
Okay. This is pretty good action. I think we could go to 106. 103.80 was a pretty big pivot. It made you money if you shorted the close, and now we're above 103.80, 104 and a quarter. And maybe we have something like this from here. Would take it
Yeah.
up there.
Yeah, it's perfectly reasonable. Maybe consolidate this a little bit longer. Yeah, it's really like I'm not super into the idea that the Fed's going to be hawkish, but if the Bank of England today, so we had to take CPI reports yesterday and today. Canada very soft, UK today soft. At some point Europe's going to ease up, and maybe the Fed just stays a little more sticky for a little bit longer. Even the RBA was a little incrementally more dovish. And I'm seeing the slowing in those economies a little more than in the US. So
we're
maybe
the best dirty shirt, and I'm wearing a clean white one. So what about yields here then, Adam? A lot of people were convinced that this was the end of the correction. And when we got under 420, similar to the dollar, but turned back higher after the CPI numbers. Do you think we could trade 450, 460? A lot of people are worried
what a
about
spot for it to be in on Fed day, right? And I think some of that move up was the BOJ, them buying, they're ending a lot of the easing programs. And I think that spooked a lot of people in the bond market. We got through it yesterday, saw the yen still weak. Nothing really changed that much, but then you had oil pressing on the top. And now you're worried about the Fed being more hawkish. So do you bust through there, right? Imagine though, say you get 460, 470. You know right now that the Fed isn't going to tolerate 5. That's exactly when the pivot was from the Fed, is when they hit 5.
Yep,
so if you're buying bonds at 475, your downside is 25 basis points. Yeah. And that we've got a huge Fed put right now. So when the US economy stumbles, we get like one bad non-farm payrolls report or a low, whatever it is, you're going to 350. So, the risk reward to buy bonds, even now is good. But if we can get that pop up to 4.5, 470, it's unbelievable. I think they're record net shorts right now in bonds. So I'm more inclined to be a buyer here. And I just think that's a wonderful trade.
Yeah, so maybe here's
TLT. Was it like 8 days in a row lower there into yesterday?
Yeah, I was looking for 90, which is about halfway back. So, we could be there in a heartbeat. Some people are looking for it to hold, but this would be a breakout. And if we're going to get that move lower in yields after this rally in yields is over, people are going to want to capture that yield, not just buy 1 year CDs at 4 3/4. Plus, you have capital gain potential on longer duration. So
Yeah, I mean, it would set up nicely today if the Fed, if I'm wrong and the Fed is more hawkish and Powell kind of says we're not going to cut in the first half of the year. And then you get rates kind of blowing out. And now you start to see weakness right away in housing, right away in autos, which is already creeping in. Although housing starts was strong this week. But, we've seen that before, 7% mortgages in the US. It's a pretty sudden stop in activity, and especially 7.5. So if we were to get bonds below, then you get the weakness maybe later in the year. But yeah, maybe the Fed is reluctant to cut rates in, September before the election. I think they'd probably still be fine in September, but certainly not in November. And that'd be like a great setup. I mean, I don't think it gets much better than that.
to be a buyer of
a
long duration debt,
the
U.S.
rate,
debt,
anything you can get for, I
like
mean, you go down the
zero
corporate
coupon
stack,
bonds. Yeah,
a safe 6% bond,
yeah.
heading
That-
into an uncertain political time, an economy that's probably over its skis a little bit, and the Fed staying more incrementally hawkish, showing you that they're determined to get rates, inflation down to 2. I don't know. That's a nice setup.
You've been a long-term copper bull, so I'm
Uh,
going to acknowledge you. I used to say, "Oh, Dr. Copper is being sued for malpractice for imitating a bull market." Well, I'm with you now, Adam. I mean, the action in copper, which is surprising with the melees still in China. I'm assuming you're still concerned about China.
mhm.
What's behind this recent copper move?
Yeah, it's
Which
funny because it's
pretty
not that great
powerful
of an, I'm not sure that's an economic barometer right now. I'm not taking it as that. I'm taking it as a sign of a lack of mining investment
supply.
and a sign of demand from EVs and the green transition and just energy now. I think a lot of the talk this week on CNBC or whatever is, and people are coming to recognize how much more power AI is going to take up. Sam Altman himself was out from OpenAI saying the big bottleneck after we get through transformers is going to be energy. We need like massive, massive amounts of energy they're building data centers like you wouldn't believe in the US.
Yeah.
And everyone is going to need these. And not only that, but you need charging infrastructure, heat pumps, all the things that connect it all. Solar uses a lot of copper. Wind turbines use a lot of copper. EVs use a ton of copper. And so and meanwhile, it's unbelievably difficult to open a copper mine. And you had just this year, they shut the one down in Panama. That was 2% of global supply. Over environmental concerns, it's you have to use a lot of chemicals to make a copper mine, and nobody wants to do it in their country. And the miners are still extraordinarily cheap in copper, but it's not one of those things that you can solve in 2 or 3 or 5 years, even once it gets into undersupply. And I think that sets up like $6 or $7 copper, which I think Goldman was talking about this week.
There's Freeport, and here's the ETF on the coppers.
Yeah,
it looks like they're on the verge of breaking out. A little hesitation here.
I mean, the torque to go from $4 copper to $6 copper on these is it's like 10x. I mean, their margins are so thin, even at 4.
Okay.
And
You
the
have a take
multiples
on
are so low.
uranium? Uranium's been under pressure. It was, the darling, and it seems like they're rotating into fossil fuels now. But a lot of the uranium stocks have, looks like they're trying to top. I guess you could use Cameco as the best of breed.
Yeah, there you
You
go,
have a
good
view
Canadian
on-
company.
Yeah.
I mean, listen, we have this big conundrum about how to solve the energy shortage, which I think is the overlooked underlying trend of this decade and maybe the next one. And we have to decide between natural gas, between coal, between nuclear, between wind and solar, or battery storage. And a lot of people want to say to wind, solar, and battery, but it isn't there. It's just not there, and it's not going to be there in time. And they're building more and more coal right now. And and nobody wants that, right?
And why did
So
Biden slow down the natural gas industry when that's, greener than coal?
yeah, and I'm really bullish on one technology to get a little bit into the equities. It's called net power, and so they burn natural gas in regular natural gas fired plants essentially, but they burn the chemistry of it is if you burn natural gas in a pure oxygen environment rather than normal air, which is mostly nitrogen, you don't get nitrous oxide. You get two byproducts of that. You get pure carbon dioxide and water. And so it's like a net power. It might be two words. Try two words. Put a space between the T and the P there, and you might get. And it's sort of backed by some pretty big heavyweights.
Yeah.
And if they can hit it with that technology, for instance, a game changer for natural gas, and you essentially have zero emission natural gas power. It was a SPAC. And we'll see, but I think Halliburton owns like 60-70% of the company, not Halliburton, Baker Hughes.
Okay.
And it kind of de-SPAC went up, and it's still got the stink of a SPAC on it, but it'll be an like that kind of technology, or there might be battery technology. I think the opportunities in the power space.
Yeah.
And this is probably a 2027, 2028 story. Like they have to prove out this technology that they can do it at scale. And if it does, though, it's like a 50x trade because the market for clean natural gas is gigantic.
Huge. Yeah.
It would be a game changer. So, that I'm hopeful that people will find solution, but nuclear is an obvious one. There is a little more uranium in the Earth's crust, though, than some there. It's not that hard to find. But then again,
Well, they've been saying the uranium bulls, there's no supply, and they've been saying that for a while, that they just can't find supply.
like
in
Cameco
uranium.
itself has a huge mine idled. So I mean, it's
Yeah.
just that nobody wants to invest in kind of greenfield supply, especially maybe Russia comes back in. That's still getting out, but you worry about that side of it.
Yeah.
These guys
they
are
found
buying up all the supply. I mean, they're just
there's
stacking.
no better cure for supply than higher prices, isn't there? Because all of a sudden there must have been some supply that didn't exist at the beginning of the year that they're finding now.
But energy, it's like so misunderstood about how hard it is to produce electricity. I think California is learning a lot of that right now. Like the bills there are going up huge in California for electricity, and you build so much solar and wind. They have too much of it in the day, but then they're still running the gas hard at night when the sun's down. So you have kind of
they
just
need
two
storage. They need that storage system for the solar.
But that's a pretty tough problem to solve. It seems.
Well, do you believe this breakout in oil? I know you're, I've never seen you bearish oil in
I get bearish sometimes.
and I've been talking to you for, at least a few months. So what's your technical view here on the oil?
Yeah, I mean, that's a nice break. I mean, the gold and oil charts are as pretty as they get right now. I don't know, maybe we retest this 80, what's that, 80, I guess, go back to there.
Yeah.
I mean, 85, I don't think you can get over 90, given OPEC has that supply that could come back. And that we're almost at 90 Brent right now, which might be a line in the sand. And so I think 85, 87, 88, sure. Maybe you overshoot 90. Big inventory report today. There was talk about 6 million barrel draw, and now people cooled on that because API was only like 1.5. And so maybe it only ends up at like 3 or 4, which I still think is pretty good.
Yeah.
And inventories are pretty tight. China demand has been really good.
I've talked to Anas El-Haji, and he said there's huge increases of demand for oil in Europe, and that is kind of surprising with them being in a malaise.
I haven't heard of that. I mean, China has done pretty well this year compared to their bad economy, but Europe, I mean, the issue right now is they're bombing the Russian refineries, right? So they might be tight for gasoline. And then you decide what Russia will have to decide if it can't refine its own oil, if it just exports it. We'll see how that sorts itself out. But obviously, bombing refineries is not definitely not bearish for oil.
Okay.
But I mean, I like the setup. I think I like demand this year, and OPEC is really what you're worried about if you're a bull, in that they lose discipline. But so far, so good. And obviously, higher prices. I mean, right now their discipline must be high because everybody's getting, 86 Brent, 80, 81 WTI. And it looks like shale isn't pumping that hard this year. We might not have any growth in shale this year, which is obviously the X factor.
All right. So you mentioned gold.
Wow.
Wow. Huh? What do you buy breaks if you get them, like back towards the old historical highs?
I mean,
If there's
yeah, I mean, I like a lot that's there. If I were to, look at the landscape and the sentiment out there, and if you would have told me that gold had broken out to 2,200, I would have thought we'd hear a lot more about gold and that we'd have some enthusiasm. But it's like nil. It's unbelievable. I think that just people are tuned into AI, they're tuned into crypto, tuned into Mag 7, and there's just like no bandwidth left for anyone to care about gold, pardon me. And it's unbelievable to me
that's
where we
bullish.
are. It's super bullish to have nobody care about it at these levels. I mean,
You're not even seeing the silver squeeze guys coming out much, and that was a pretty nice move in silver. I think we'll get a nice pullback to buy into, but and
one of the arguments there with silver is that retail kind of gravitates to silver in a precious metals bull market, and that makes silver outperform gold once things get going, but it hasn't happened yet, which tells you the retail hasn't showed up yet. And retail is usually the last to show up, and that's a bit of a warning sign when you get that. And it's the same thing in gold miners. Like, they're just dead. Like,
they're not
it's
dead.
unbelievable. If you look at Newmont or Barrick, I mean, they're like on the lows, and it just doesn't make sense.
It's been a decent pop in certain miners. GDX acted better. Newmont, which is a big part, I believe, of GDX, you're right, is the weak sister, but it rallied from under 30 to 34. But look at some of these silver stocks. That was a nice first wave out of the hole. I think down here, if you bought it, it was a theory. Now you have at least a market stop. Look at this one.
I mean, these
140
guys,
to
I
220.
got
That's 40%.
I mean, you can hedge out. It's not a hard market to hedge production in. So you wonder if you can lock in some pretty nice cash flow from these mines if they can control their costs.
Yeah.
But nobody cares. Nobody
Okay,
cares.
I do. I can't wait
Well,
for
that's it. That's the
this
opportunity.
pullback. Yeah, that's really a great insight, because normally you'd have DSI. I don't know what it is in gold, but after a move like this, it would be 90%
It's Asia,
bulls.
right? Like, it has to be Asian central bank buying, and you understand why China's buying gold rather than treasuries, and Russia and Middle Eastern central banks, maybe even Latin America. And they're just gobbling up gold. And I think it all makes sense to me that we should have a bull market here. But maybe we need a washout in tech to get that, or we need Fed rate cuts or a turn in the dollar. But again, now you just get paid to wait in the miners.
Or a bear move in Bitcoin. Could Bitcoin
Well, that
pull
too,
back to
there
40?
is. Listen, that's hard to
Bitcoin
ignore.
could Bitcoin pull back to 40K?
Yeah, I mean, the halvening is probably a sell the fact, same as the ETF launch was. We were down 20% on that. So, 40K would be a pretty painful move. There is a lot of enthusiasm right now, so maybe it is a little bit
200K.
overdone, but you kind of just got to read the room. It's a tough room to read too, because the moves can be incredible.
Yeah, Larry Fink got richer. So why don't we end it with S&Ps? Are we going to 6,000?
Well, like I said today, sell the statement, buy the press conference. Yeah, listen, it is pretty good chart right there. I mean, Nvidia's incredible. It's an incredible company. It's unbelievable what they're doing. We're gonna have open, GPT-5 is gonna come out this year, and it's gonna be sensational. It's gonna be the stuff they're doing in video and other ones,
Yeah.
in images. I mean, it's hard to bet against anything that's been driven by that. And
I'm
Microsoft's
a
in on it.
I'm a
Google's going to
hologram.
figure it out.
I'm a hologram today.
Well,
That needs a
well.
haircut. But you
you
talked to
you should talk to your maybe AI isn't so good then.
yeah, maybe AI, why don't you just right now give me a cut?
But you have a
I
huge
got
Fed put, right? There's just a
yeah,
gigantic Fed put. And I think, well, okay, 50, 75, who cares? The only thing that matters is if the economy hits a rough patch, the Fed is going to
yeah,
cut. Like,
yeah.
I don't know when that's going to be. And I don't think you need to know if you want to be long stocks. You have the Fed in your back pocket. It's like an ace that you could play, 500 basis points worth. And come on, that's a lot of comfort to be long.
Well, you were talking about gobbling things up, and I always gobble up these interviews, Adam, and you really crystallize things for me. We've been talking probably for 7 years now, going back to FX Street days, and I want to thank you for your giving spirit, and
Well, hey,
that
listen, I
you
just like the
come and
conversations, Dale.
yeah,
Wish you
and you
good health and some extra wealth here today for everyone
yeah, I
listening.
could use a little more good health. I've been suffering from headaches for 3 months, so
Oh, yeah.
anyway, my headache went away talking to you. So you were a great distraction today, Adam. I want to thank you. People need to follow you at Forex Live, and you know you're one of the best news traders around, and I think you're going to have a great day, and that 2024 is one of your best years for you and your family and your
Well,
business.
thanks, Dale. Hopefully they're
Okay,
yelling
bro.
in my ear here in the other room. But
Okay.
it is a heady times here for news trading and economic data trading, and it is what we do, and it's what I enjoy, and the Fed doing it live today. I really relish those opportunities and try to avoid some of the pitfalls. And there have been some brutal moves coming out of the Fed lately
Yeah.
that sort of run against um, a lot of things, and flows really are a pitfall right now. But it's a fun day and an interesting day and a day filled with opportunities. So thanks for having me on Fed Day.
Cash in, baby. All right, Adam Button, everybody. My trading warrior brother. Follow him, check him out, and I'll be talking to you late spring, early summer, Adam.
I'm looking forward to it, Dale.
All right, my friend. Adam Button, everybody. And you could join the team in 13 minutes on the 12 now on the morning edge. Good hunting, good luck on the Fed. And, keep this in mind. The market will be here after the Fed. It's not illegal to stay flat and wait for the dust to settle. So make sure your equity is here after the Fed and trade with less leverage on days like this. That's from the coaching aspect of me. So you're welcome, everyone. See everyone tomorrow. And don't just count your pips, count your blessings. Adios, my trading warrior brothers and sisters. Adios.